Welcome to the Productivity Podcast. It's our monthly catch-up with Diane Will from Rendell Intelligence. We are now talking about April to May. I think it was a bit of a car crash in April. Dice, hoping for better news in this one.
Yes, absolutely, Simon. Hello. Yes, April was not very great. It was rather dismal, actually. Sales in April had dropped by 11% year on year. And that was for two main reasons. Firstly, we were comparing a non-Easter month because, of course, Easter this year was in March with an Easter month last year. And, of course, it rained. We had a lot of rain and that impacted both footfall and sales. So, we didn't start off on a great foot. But May has been much more encouraging. Footfall is still down year on year, but this is a normal trend. This is the trend that we saw before COVID. So I think we need to get ourselves back into that mindset that footfall has returned to that long-term trend of a drop each year. So footfall into stores was 3.6% down overall, and this is data from Sensormatic. And actually, shopping centres were the worst performing out of the three types of retail channel: high streets, retail parks, and shopping centres. Footfall into shopping centres was 4.5% down versus 2.7% in high streets, and probably that's because we've had two bank holidays, a bit more resilient in the high street. The weather was quite nice, so people tended to shop in town centres. So that's footfall, and I think as I said, we need to come to expect that to continue its long-term trend of a downward slide. Sales, on the other hand, and this is sales from Beauclair, who tracks sales in towns and cities. So towns across all of our high streets, physical sales, not online sales, so all offline, not online, actually bounced back in May and were just 0.6% below May 2023 versus 11% below 2023 in April. So that's pretty good, pretty encouraging, actually.
And I know we've talked on previous ones, we'll kind of come on to what's happening in the world in a second, but I mean, health and beauty seems to have performed well the last couple of months, fashion not so well. Are those trends still there?
Yes, they are indeed. So let's talk fashion first, because a lot of fashion in all retail channels. Fashion sales dropped by 4.2% year on year in May, which obviously isn't great and continues the trend. But in April, it dropped by 12.6%. So a slight bounce back, and actually on a month-on-month basis, sales have actually gone up by 13%. So there's a little bit of a bounce back there, but it's still not great. People are still holding back on fashion. Health and beauty, on the other hand, in May, sales had increased by 2.4% from May 2023, which, strong growth, and also strong growth in the average transaction value. So the number of customers, number of transactions was actually down, but the value of what people were buying, 4% higher. So people were spending more on health and beauty, the product, than they were last year.
So when people are out shopping, they're in theory spending more. There's just less of us out doing it. Is that right?
Absolutely. I think what we've done is we've lost the browsers, because clearly if you don't want to spend money, you probably won't go into a retail store. You'll find something else to do with your time. And if you are looking for certain products, you are likely to spend more on them because they're your favourite type of product. Interestingly, and I know you're probably going to be asking me about this, household products. So that's the next one we were going to talk about.
And household, just for clarity, so that's everything from sofas through to soft furnishings, through to washing machines, dishwashers?
Absolutely. Small ticket items, large ticket items, anything to do with the home. And of course, that had a huge uplift during the last few years with COVID. We didn't have anything else to spend our money on but our homes. But now we've had the reverse of that. And versus last year, versus 2023 in May, household sales were 32.7% down. I mean, a third lower. Wow. So just people aren't, they spent money on their homes. What else are they going to do? But interestingly, like fashion, like that health and beauty, the number of customers and transactions are 50% lower. I mean, huge drop. But actually, the transaction value is a third higher, more than a third higher. So of those people who are spending on household, they're spending a lot more money. So it's likely to be obviously people who are at a higher end, who have spare cash, who are maybe moving. all of those guys are spending more money. But generally, as across the board, we're spending less on the household.
So it's, I suppose, back to conversation we had quite a while ago about conversion. So if people are in the shop, they're in the shop for a reason, because we've lost the browsers, like you say. So it's then about maximising the conversion and the uplift from there when you get a chance to speak to them.
Absolutely, it is. And you've got people who have cash, and there are large sections of the country and large groups of people who do still have cash, but it's making sure you're maximising the value of the customers you're getting, and that's been the case for a long time. If you're going to drive sales, you've got to make sure that your overall transaction value is higher. So making sure you're getting that conversion, making sure as a retailer you're maximising that sale.
An interesting couple of months coming up. So at times in the last month, we've had the big yellow thing in the sky, which is the sun, which is when none of us are quite used to, are we? So that makes a big difference to the feel-good factor and spending. Pending general election. So,
yes, yeah, it's really interesting actually, because there are a couple of indicators out there, economic indicators, that I always look at. So firstly, I look at consumer confidence, because inflation is one thing, and I'll talk about that in a minute, but actually how confident people feel about their own financial position really plays into how prepared they are to spend money, and how prepared they are therefore to go into stores. And actually GfK are the go-to people that I use, and they've produced this consumer confidence index score for years and years and years, and it's widely used within the market. And in May, and it doesn't sound great, it sat at -17, and that has slowly improved since January, and improved over the last couple of years. So in April it was -19, in May -17, March -21. So we've seen this slight improvement month on month all the way through from February, actually. So that is encouraging, really encouraging. And actually, probably the big uplift was in people's views over their personal financial situation over the next year. And that index score has gone up from 2 in April to 7 in May. So more than 3 times. So, it's a low score, but it was 0 in January.
Yeah.
So we're seeing that, and it's the trend line that we need to look at, that movement upward, which is good. And of course that's related to the fact that inflation is coming down. It's now in April it was 2.3%. So prices obviously still rising, but they're rising at a much lower rate. However, in some key sectors, clothing and footwear, it's still nearly 4%. Food, it's over 4%, and hospitality is 6%. So it's not universally low. That 2.3 is largely driven by reductions in costs of utilities, really, which is actually decreasing. It dropped by nearly 5% last month in April. So, it's a mixed picture, but generally, actually, if you take it in the round, it's actually quite encouraging.
Good. That's what we like to hear. And
yeah, absolutely.
Any thoughts for kind of as we head into, well, I suppose it's peak summer, isn't it? And kids breaking up from school as they finish exams and their school year. So peak holiday season. Have we got any thoughts on that?
Well, what normally happens is spending and footfall start to ramp up a little bit. Some people go on holiday in the UK. People are starting to spend for holidays. And of course, when the schools break up in July, there's holiday spending. So that tends to be the trend, and you start to get this peak coming on towards the summer. So hopefully in June we'll see some further strengthening. We are in this strange position of the election. The election doesn't necessarily impact spending and consumer behaviour directly. And actually, if once the election's over, you tend to get this turning over a new leaf, fresh start approach, and people feel a little bit more positive. So hopefully that will help too. So I'm feeling pretty encouraged actually over what's going to happen over the summer. We've been through the worst of things, I think. Obviously there are still economic and financial pressures for households out there. That's undeniable. But we've been through worse in the long term that I've been working over the 3 decades that I've been involved in retail. We've seen a lot worse than we are now.
And fingers crossed it's sunny, because that makes the world feel a better place, doesn't it? Everything feels that's slightly less of an issue when the sun's shining.
Well, absolutely. And of course, it does drive spending. People buy for their gardens, they'll buy food for barbecues, all of that sort of thing. They'll entertain more, they'll go out more. all of that drives spending. So yes, good weather always does help. And we don't want it absolutely 40 degrees because that doesn't help spending necessarily, because people don't go shopping when it's 40 degrees, but some nice mid-20s sunny weather would be great.
Well, fingers crossed, and we'll find out when we catch up next month. Thanks as ever, Di, and we will speak in a month's time.
Thanks, Simon.